Right, let's just see. Got a message from Tamara, which may be that we're already visible. So yes, that is from her. So I guess we can get started straight away whenever you're ready, Samantha.
Thank you, Simon. Hi, everyone. I'm delighted you could join us today. My name is Samantha Taylor, and I'm an analyst at IFI Global. Welcome to our podcast and webinar on renewable energy investing. Today, we'll be covering the latest developments in renewable energy investing and touching upon performance issues in this sector, as well as covering the growing number of challenges that we believe need to be addressed. The sector is growing very substantially and is encountering a number of teething problems as a result of its rapid growth. Simon Osborne, our CEO, is going to give a brief presentation for approximately 20 to 25 minutes, and then we'll open the floor up for questions. Please do use the Q&A button at the very bottom of your screen if you would like to ask some questions. We plan to end at around quarter to the hour, depending on how many questions we receive. So that should be it from me, and I will now hand you over to Simon.
Thank you very much, Samantha, and welcome to everybody. Thank you very much for joining us today. We have people joining as far east, I think, as the Baltic Republics, and as far west as various places in the US, including quite far into the west in the US as well. So, welcome to you all. I'm delighted you can be with us today. My name is Simon Osborne. I am the CEO of IFI Global. For those of you that don't know us, and I believe there are a number of people joining us today that are in that category, we are a research and media house based in the City of London. On our media side, we have three monthly publications. One of those is Sustainable Investment Intelligence, which is one of our three monthlies, which is growing the most quickly at the moment. And I have to say, to be honest, that I find the most fascinating in terms of the content of which it covers. And we also have a macro weekly that covers everything from macro events through to what's going on in alternatives, a little bit renewables now and other sustainable areas and private markets, etc. Let's get on with today's presentation. We are going to start by talking about the renewable investment boom that is undoubtedly going on at the moment. Got a few things to say about that. We've also got a number of things to say about the investment performance situation, which is complex, and we will come to that in a few minutes. We're going to touch upon the different sectors that make up the renewable category. And finally, something which really is not covered nearly enough, if at all, the question of the governance of this particular investment sector. So, as Samantha says, I'm going to talk with a little bit of prompting from time and again from Samantha for 20, 25 minutes or so. And then we'll see how many questions we get, but we will finish by quarter to the hour at the very latest, if not before. So let's talk about the renewable investment boom. We won't spend too long on this because you can get these figures from various different sources. And one of the good things about renewables is that it's very well served in terms of data providers, and it's quite easy to find these figures yourself, and you can delve into them in a lot of detail should you wish to do so. Here you see it, clean energy investment is now over $3 trillion, according to Bloomberg Net. That's a big increase. You'll see that on a graph in a second. A figure I particularly like, so I decided to put it in. This is from the IEA. At the moment, we are now in a situation where over $1 billion a day is being invested in solar, and that is undoubtedly just going to keep on going up. Pension funds, sovereign wealth funds, family offices, endowments, and all the other professional investment categories that are out there are expanding their allocations into renewables. Many of them, if not the vast majority, or close to all of them in many respects, certainly in the pension fund and sovereign wealth fund category, were and have been investing in renewables for quite some time. But what's really interesting, particularly this year, is that they're not content with what they had. They are expanding and increasing their allocations, and I'll say something about that as well in a second. And so research which was done at the very end of late last year by the fund management group Natixis, a very large sample of institutional investors around the world, found that the opportunities they see in sustainability, they didn't break out renewables, to be fair, so it's included in that, but other things as well. The more people in that survey by Natixis found that the biggest opportunity in private markets is in sustainability, including in renewables. So let's just have a quick look at what's been going on over the last 10 years. This is from the IEA. We're now at a situation in 2025 where we are getting to a 2-to-1 ratio of clean energy investment over fossil fuels. We've just reached that for about the first time. If you go back to 2020 or 2019, they were roughly equal. And just see how things have changed over the last 5 years. And I think you can make a very substantial bet that if we were doing this presentation in 2030, those trends would have extenuated in the two directions that are going even more. So we are undoubtedly, beyond any reasonable doubt, on a huge surge of investment into clean energy, green energy, clean energy, call it what you will. I mentioned the investment that's coming in from professional investors. One of the things we do at SII continuously, and we've been doing it now for 3 years, Samantha, or Laura,
Yes, 3 years.
the Spain environmental investment monitoring that you're responsible for, where you track allocations from family offices, sovereign wealth funds, pension funds, and it's going up quite significantly in all the categories. This is a broad summary of the 5 categories that we track, which are the largest that the investment industry overall is allocating to in sustainability. Quite incredible. This is a little while ago now that there was basically this is just pension funds, 252 pension funds, the largest by and large around the world. I think we've extended that since, Samantha. 252 basically all investing in renewables in some shape or size, in different ways, very different ways in many cases, but nonetheless all in renewables. But as I've already said, and it is worth really emphasizing, what's happened this year, and I think this is the analysis you did a couple of months ago, Samantha, in the late spring, early summer, is that they are increasing their allocations. They're not just sitting on what they've got, they're actually growing those allocations quite significantly, not just in the pension fund category, but in the sovereign wealth fund category. The family, how many family offices?
Yes.
We're doing that too.
So we track over 150 sovereign wealth funds, family offices, and endowments and foundations. All of these have had, within the last 12 months, they have significantly increased their renewable energy holdings. Pension funds, our EIM database has been extended to over 400 pension funds across 23 countries. Over, I think it was 80% of them within the last 12 months have increased their allocations to renewable energy. It is by far the focus for their impact investments.
Right. And so there you have it, and we will be extending it even further, and I'm sure we'll see the same thing when we do that as well. So that's the good news. Now I'm going to come on and not necessarily give bad news, but give a slightly different perspective on this, if that's the right way of putting it, which is, let's talk about performance, which isn't talked about nearly enough. And by the way, one of the points I like to make when we're talking about renewables is the industry coverage, by and large, the analysis that goes on in renewables, I think is pretty poor. The IEA is fantastic, but they're not in the investment industry. Bloomberg NEF is absolutely sensational, but again, they're not in the investment industry either. There's no one really doing the same sort of things as are done in hedge funds or private equity or in various other typical private market strategies in the way of breaking down and analyzing what's going on. And that's an opportunity for somebody to do. But let's quickly talk about private markets versus public markets. It's my personal view that if you look at the performance that you can get your hands on from the private market side, of course, you can get the public market side, and I'm going to say something about that in a second. This is not where public markets really should be. It is very much, or should be, in the private market space. And in terms of what we have found, probably it's not. There's nothing. This is not a place where you're going to see absolutely sensational returns in any respect, but you can, if you're in the right private market strategy, see decent steady returns. The best one that I've come across recently is renewable infrastructure funds, renewable energy infrastructure funds, which since 2014, so now just over 10 years, have been returning about 10% per annum over that 10 plus year period. And there are other things in private markets, insofar as difficult, obviously, in private markets to see what people are doing, because by definition it's private markets. But insofar as you can, you know that there are some reasonably good returns. Nothing sensational, but steady and reasonable in certain niches, particularly on the infrastructure side. However, when you turn to public markets, the performance is really ghastly. And I'm just going to give a few examples of that now. Schroders Global Energy Transition Fund lost 24% last year, and many others were down by amounts that weren't that different from the Schroders Fund. Worse than the long-only active funds are the ETFs. God only knows why we have ETFs in this sector, but we do. And there you have one example, a couple of examples. Invesco's solar ETF was down 37% last year. Its wind ETF was down 14% last year. One of the better ones is the iShares Clean Energy ETF, which is down 43% over the last 4 years. So there you have examples of well-respected, very well-known investment houses with their ETFs in this particular sector not doing particularly well. Quickly, I wanted to mention in passing an important point, which is renewables are still to a large extent clubbed together as one investment category. I think as time goes by, that will change. It's really should be seen as different things for different in different areas. So let's quickly talk about some of those different areas that make up the renewable investment category. Solar is expected to reach, in terms of investment by the end of this year, 450 billion. That is the biggest. About 4 or 5 years ago, solar and wind were roughly about the same size. Solar has gone far, accelerated past wind, and I think has a different trajectory going forward into the future. And solar investment just for the first half of this year reached 252 billion, which is about 60% of the total renewable category. Wind, which has had a rockier time than solar by and large, although it's seen a slight comeback in the last 6 or 12 months, had 126 billion, according to Bloomberg NEF, invested in it in the first half of the year. And wind, as you can see, is roughly now 30% of this particular category, meaning that solar and wind together are 90%. Hydropower is actually declining, you said, Samantha, when we did some
Yeah.
presentations. So that's
The
on the way
recent,
down. I don't know
yeah,
why
the
that is
recent
on the way
figures.
down.
It's because of a period of drought over the first half of 2025. Obviously, the dominant regions for hydropower are China and the US. So again, they are affected by the environmental conditions. That's why this is steadily declining.
And what is growing, but from a very, very small base, is geothermal, which we've been looking into for the first time properly recently, which is very interesting, an opportunity which is coming along. I spoke that not that long ago over the summer to geothermal fund managers launching his fund, I think this autumn, and he, interestingly enough, he's using tokenization to distribute that fund. I think pretty much all through tokenization. So that's the broad category in broad brush terms. Um, sorry, one second. Um, something for us all to ponder who are interested in renewables is that, this comes back to the question of performance we were just talking about, is are we uh, about to get into an energy glut, not just for renewables, but in all forms of energy? We are going to be seeing, and it's starting quite soon, not necessarily, certainly not this year, perhaps not much next year, but certainly very much after that. And as we get to the end of the decade, even more, the fruit of all this investment that we were talking about a minute ago, a lot more renewable energy is going to come on stream. Um, as I say, thanks to that fantastically large amount of investing that's going on. But it's going to be coming on stream at a time when oil and gas prices are set to substantially decline, if not collapse, according to the IEA. And that's not even taking into account if, for example, there was an end to the Ukraine war and the political problems between Ukraine and Russia, etc., were sorted out. That would probably mean an even greater glut on world markets. But even not taking that into account, the IEA thinks we are going to see a substantial drop in demand for oil and gas, just at the same time as we're going to see a massive surge in supply from renewables coming onto the market. And in addition to that, Bloomberg Neff says that the costs of producing clean power are coming down quite significantly at the moment. They've got some very good stuff on that, and that's only going to increase in the future. So, and that's a good thing because it doesn't cost as much to produce. The big upfront costs are now working their way through. But again, it's going to potentially add or contribute to the potential energy glut that is coming our way. The energy glut is absolutely fantastic news for energy consumers and for businesses, but obviously not so good, in fact, pretty bad for all forms of energy investors, including investors in renewable energy. Sorry, I keep pressing the wrong thing here. So let's try that. Right. Something that, as I said at the beginning of this presentation, isn't really touched upon nearly enough, if at all, which is the governance of renewable investing. And you, Samantha, you may have something to say about structures in a second. I think there's many reasons why we should bring up governance, and mainly because it's pretty bad overall in this particular sector. One of the reasons I put forward here as the top point is that, to quote the head of the sustainability, I think he is at BNP Paribas, who says that there is, quote, a abundance of capital going into renewables, and the money is flowing in, and that does or can cause governance problems because people don't need to take the governance as seriously when the money is, flowing in the way that it is. And there have been, we've heard of a number of problems that have been caused by this almost deluge of capital coming from pension funds and other professional stroke institutional investors. Most of those, if not all of those, generally speaking, get swept under the carpet, and you don't find out much about them. Or if you do, you certainly can't publish anything because it's not, verified and verified again. And we don't want to end up, with a lawsuit coming our way. But we have heard, I have a friend who works with a number of pension funds that's told me things off the record, which I've sworn to keep quiet about. But the one that we can talk about, and it's not the only one we know about, but the one that we can talk about is from a medium-sized pension fund called Thurrock. The Thurrock, it's a county council or Thurrock. It's not far from where you are, Samantha, in
No,
Sussex, isn't it?
just down the road near
Right.
Basildon.
So the story there, for those of you who don't know, is that in 2022, it was unearthed that Thurrock had invested of their pension funds money £644 million in solar farms via a firm called Rockfire Capital. It lost 200 million pounds of that investment, so approximately a third of its investment. But nonetheless, the person behind Rockfire Capital, which I'd never heard of before, Rockfire, still managed to pay himself £7.3 million plus commissions. And as far as we could see, there was no independent governance done at all on that investment when it happened. Those kind of things. This is an example of an emerging investment category. When you get these emerging investment categories, whether it be in sustainability or in renewables or in digital or in the early days, going back that far, in the very early days of emerging markets, you do get examples like this. And we really do need to see better governance in this particular category for it to develop properly. And it really is worth making the point that investing in renewables is often complex and certainly not at all transparent. You have often in renewables a lot of leverage. Very often, these aren't single corporate entities people are investing in. It could be a series of SPVs, and you have some very complex financing arrangements. And also, you need to know something about the engineering. So you need an engineering, some background to a degree, or certainly some sort of understanding. You need a financing understanding. You need a fund structuring understanding as well. This is not a simple, straightforward, regular, routine type of investment. And I think that's one of the reasons why there have been problems. I think we have another publication called the NED, which focuses on fund governance. We've covered this subject in more detail and quite in increasing frequency on that side of our business. And we've said there that we would love to be involved in trying to help with others, trying to educate people on what's needed in this category. If anyone following this webcast would like to talk to us about that, please do get in touch with us, because boards with experienced independent directors really are bad needed. They're very, very difficult to find, because finding those individuals with those skills and experience is very, very difficult indeed. I'll stop there. Finally, in conclusion, thoughts to end the presentation on. I do think, or I certainly think it should and will be the case, that we're going to be in a situation eventually where people will talk about solar and wind as being separate investment or separate energy categories altogether. In the same way today, people talk about oil and gas, they'll talk about solar and wind. They won't just see them as all being part of the renewable overall category. And another thought, particularly if you're anywhere connected to the UK, last week we got, for first time in a very long time Yeah, we got some good economic news when it was announced that something in the region of $200 billion from the tech giants, the US tech giants, are going to invest in the UK over the coming years. That wouldn't have happened, or it certainly wouldn't have happened anything like on the same level as it is happening if it wasn't for the fact that the UK has a relatively advanced renewable infrastructure. Some of the firms that are involved in this, NVIDIA, for example, has said it's going to be 100% renewable, or is already 100% renewable. Google has committed to being 95% renewable by the end of the decade, and there are many other firms involved in this that have got the same sort of energy objectives. Renewables absolutely is, with the enormous energy consumption for electricity that AI uses, data centers use overall quite incredible amounts of electricity that are required. You are going to need reliable, dependable, renewable energy in order to keep those entities going. And the staggering statistic that I often quote, which is that the US economy, obviously the world's largest, is going to have more electricity processed through data use. There's going to be more electricity used through its data use by 2030 than through the entire country's manufacturing. That's how large the data centers, the AI, and the related electricity needed to keep those things going is, and it's only going to be possible because of renewables.
Yeah, and I would just add in quickly, as we wrote a white paper for IQEQ on sustainable data centers, which covered that in much more detail. I would say that, within the tech revolution and the growth of data centers, you have data center developers such as Google and Microsoft pushing for, the lesser market cap renewable energy types, such as hydropower. Google, within the last month, I think, signed a $3 billion contract with Brookfield Asset Management for the sequester of hydropower to support its data centers. You also have Meta's data centers signing a deal in New Mexico for geothermal. So they are pushing for this, renewable energy growth, I think.
Thank you. Yeah, thanks for that. Absolutely. I think that's a really interesting story, the marriage between the tech revolution and renewables. And as I've already mentioned, just to emphasize the point, much better investor oversight and analysis are needed, not just the governance, we need much better categorization. And there's something else we do, and we haven't talked about this today, and we're running out of time, so we won't go into this now, is that we do track a lot of direct investment, particularly from the pension funds that goes into renewables. A lot of it is not going through the traditional fund structures of any shape or size at all, but we are tracking that. And some of these are very creative, very interesting ways that they are allocating to the sector. And by the way, the same applies in biodiversity and in other areas of sustainability as well. So we are tracking that at IFI Global. That's something, a large part of what Samantha does as well. And finally, as I've already said, I think renewables they're going to need their own governance structures. They don't fit into the traditional investment industry's governance structures. Someone needs to invent something else because we don't want to see any more situations like Thurrock and Rockfire. And there are other ones that have happened, and doubtless there will be more in the future that will come along. Finally, before we see if there are any questions, just quickly, what's coming up at IFI Global. We've launched this thing called IFI Global Interactive, which means that all our subscribers, what we call our corporate subscribers at least, are able to follow up on anything that we do in any of our publications and indeed our presentations and our webcasts, and ask us follow-up questions, and we'll get back to them. So the example I just gave about individual allocations from pension funds going into renewable categories or into other areas of sustainability like biodiversity or whatever it may be, then that is something you are welcome to send us your questions and we will answer that. It's all part of your corporate subscription service. And again, at the risk of repetition, we are now tracking alongside with the growth of IFI Global Interactive individual investor allocations to each of the sustainable sectors. And we have put our hand up to say we haven't had any takers yet, really. So we'll help with governance, advice, and education. We have a few independent directors. We know a lot of independent directors in the traditional fund centres who would love to have more board positions, but they don't necessarily have the right experience for this sector we're talking about today. But we put our hand up to say we'd like to get involved in education for them, should they wish that to happen. So with that, Samantha, I think I'll stop sharing screen and we'll see if we've got any questions.
Yeah, we do. So the first question is renewable investment mainly in the public or private markets?
Well, as I mentioned when we went through the performance, it's in both areas, but I think it should be, and it should remain in the private market side for quite a lot longer yet before the general public and retail investors get involved in it through mutual funds and other entities like that.
Mhm. So our second question is, how much do the prospects for solar and wind vary?
Yes, again, I fleetingly touched on that in what I was saying a few minutes ago. Solar absolutely, I think, has become the dominant renewable category. I don't think that's going to change. Offshore wind, in particular, has had tremendous trouble, not just offshore, but to a certain extent onshore as well. Some people following this webcast may be familiar with a firm called Ørsted, which is the biggest wind provider, which is a Danish company. It's had real problems both in the US and to a certain extent in the North Sea off the UK and in one or two other places as well. They've really been struggling. And one of the problems with particularly offshore wind is that they're discovering that the turbines are going to have to be replaced more quickly than they first thought when these giant entities were built, paradoxically because of climate change, because of the weather is getting at them and they're having to, these giant blades and various other things are having to be replaced. And they have been asking various governments, including the UK government in the past, certainly the Danish government and others, for more money to keep their business going. So offshore wind's got problems. I didn't get into this in the presentation, but there are still a number of quite prominent skeptics about wind and solar, particularly wind, and they make the point that or those who are skeptical make the point that it's an inefficient use of energy. It's always going to rely upon very heavy subsidies in order to keep going. Solar is very different because anyone can put a solar panel on the side of their house. It's a very different kind of. You get the large solar parks, of course. You get everything from those giant solar parks that in parts of the world where you've got phenomenally good sunshine through, as I say, to people putting things on the sides of their house. So it's a different category altogether, and I'm sure solar will continue to grow. But even with solar, on a cloudy day, according to the research I've seen, the efficiency of solar drops down to 10% of what it could be. And of course, even in the Sahara, you've got night. So for about half the 24-hour period, approximately, there's no sun shining at all. But these are all battery storage technology will be the breakthrough if and when it comes. That's still some way off, because that will be the ultimate dream, was when the energy that is being generated through renewables can be stored and it doesn't have to be used immediately.
Mhm. So just before we touch on the last question, someone has asked whether our sessions are recorded. Our sessions are recorded, and you should receive an email with the link to the recording on YouTube and through our podcast library. And whilst you're in the podcast library, you could also watch our renewable energy fund structuring, which we did with EPIC, the AFIM, which goes into the types of legal structures that are preferable to house your renewable energy assets. So the final question is, has the Trump administration's anti-green agenda impacted renewable investment in the US?
Um, yes, it has, but I don't know whether it's going to be substantial. Luckily, in the states, they have a federal government structure, and the certain states, particularly California, which is Democratic run, is very powerful, and some of the other large states that are the most important ones, like New York and other ones in the Northeast, are in the hands of state-run politicians who are very much in favor of not just renewables, but very much in favor of the green and energy revolution overall. Having said that, we quoted in the presentation that the first half figures reached another record for renewables, but it did show a decline in the US. There was a decline
Yes,
in the US, even though net overall, the rest of the world continues to grow.
yes, there's been a decline of 36% on the second half of 2024's investment figures for the US. There is, it does show a shift for reallocating capital towards Europe for renewable energy investments. Europe is up 63% on the second half of 2024. So there is a shift.
Yeah, there is a shift. Where we go I mean, with the US, the current US administration's particular views, I don't know that we're getting into the political realm, which is not our job to do today. Samantha and I end up, well, Samantha is often on the receiving end rather than I can say we have a dialogue on this. But it's probably more like a monologue from me with Samantha politely listening to my views on these particular topics in some cases. But yes, clearly it's not a good development what's happened in Washington, D.C. But luckily, at the risk of repetition, there's a lot of good things still happening in the US. And very quickly, Samantha, you may remember this. We covered this in our weekly recently. What did happen in California, where they managed to beat off a challenge in to downgrade various environmental laws? Do you remember what that was?
Yes, that's the SAB
Oh,
121.
good memory.
They had I've got a legal brain. They had a challenge to strike down the law, which would require companies over a certain, total assets under management to disclose their climate risks as well as other financial related risks. It was challenged obviously by the Republicans, but it's been struck down. So it will probably be more legal challenge, but yeah, it's definitely one to watch. So
Yeah.
yeah, there is a wave of litigation attempts. You have the same in New York, and is it Virginia or something? Vermont? No,
Virginia is a huge
something.
place for data centers, by the way.
Yes, yeah, it is. There's a lot happening in the US.
Right. Well, thank you all very much for joining us today. I think was that the last question? I think it was.
Yes, it was. Yeah.
Okay, thank you all very much for joining us. By the way, this topic is covered in more detail than we've been touching upon today in the September issue of SII, which will be out, if not tomorrow, then at the latest on Wednesday. And as we suggested, it's something we're covering very regularly indeed. And we'll be doing another of these things shortly in other areas of sustainability, particularly in the biodiversity and nature area coming up soon. So have a good morning, afternoon, evening, wherever you are. And hopefully see you the next time. Bye bye,
Thank
everybody.
you. Bye bye.